Good morning and welcome everyone to a edition of Daily Mortgage Rates Live with the Mortgage Calculator. We are a lender and broker that loves to work on all types of loans, and we will go over our live rates for all of our standard loan programs today. And we always go into a deep dive on an interesting topic. A unique loan type today. We'll be going over one-time close construction loans, which allow our borrowers to purchase a lot and finance the construction of a brand new home from the ground up, with the end loan being the one-time, so they don't need to refinance after the construction is finished. So we'll go over a few different examples here. Definitely definitely a challenging loan, but we love to do those. So we are live on all the different platforms. So let me go ahead and get for today. So if you'd like a full breakdown, a full loan estimate with all of the itemized fees, please get with one of our team members. We have over 400 in over 30 states. Be happy to help you out if we are able to. You can even drop a comment here or just go to our website. But let me go ahead and switch my screen and we'll get into today's live rates. So first off, we always want to look at the 10-year treasury. That gives us a good idea overall for rates. Let's see if I can move myself a little bit. Sorry. This gives us the best overall for all the different rate programs. So we can see in general in the last 5 days, we've definitely had some good news. The markets are looking in our favor here as the rates are coming down. And this morning, slightly higher, but we're leveling out here. And even yesterday, we were just below 4. So definitely a good sign for rates. And as I always want to put in perspective, we are still at 1-year lows. So now let's get into our actual live rates for today. I'll go ahead and refresh this. So we have the live rates for the very moment. And we always want to make sure we compare a scenario. We compare across all our different loan programs, since we do a range of different programs. We set a single family home, a $500,000 purchase, $300,000 loan amount that corresponds to 60% loan to value, a 760 estimated FICO score, 40% estimated debt to income ratio. Compare all the programs side to side. And first off, we have a conventional option here. It's what most people think of when they think of a mortgage. Rates today for a conventional home come in at 5.625, and final APR coming in at 5.3. And if we switch over to FHA is always a great option if our borrower apply for conventional. Allows a little more leniency on credit issues and a higher overall debt to income ratio. And rates today come 0.125, final APR 5.995. And you see there, that's just a touch higher than our conventional. That's typically because of the extra fees that are included for FHA, the upfront and yearly mortgage insurance that is required. So always compare that final APR. And for VA, eligible vets, active service members, and surviving spouses, these are amazing programs. Rates today come in for VA 5.25, and the final APR comes in at 5.7. So when you compare side by side to FHA, even though the rate might appear lower, notice the APR is lower because there are lower fees there for our veteran. And the final standard government option here, USDA. Those are for properties that are in the USDA eligible areas of the country. And borrowers that are eligible and the properties that are eligible, those are pretty amazing programs. Today coming in at 5%, final APR 5.698. Typically compare that to an FHA option or a conventional option if our borrower is shopping in those USDA areas. So notice USDA is just a touch cheaper than both. So definitely a good option if you're looking in those rural areas of the country. And some of the programs that we love to work on that are very unique are non-QM alt doc options, is where we start to be able to use other types of income, such as bank statements, 1099s, P&L statements, etc. Great for our self-employed borrowers to use for a primary home. So if our borrower perhaps doesn't apply for conventional using standard documentation, we can switch to our non-QM alt doc for a primary home. Rates come in today 5.875, final APR 6.145. So just a touch higher than conventional, which is typical. The other day we were almost identical, which was pretty amazing. but with the recent drop in rates, these rates today are coming in pretty smoking. And to use our non-QM Doc programs for an investment property, rates today come in at 6%, final APR 6.321, which will compare to our conventional property. Same rate, 6%, final APR 6.311. So notice conventional is a touch cheaper, but a lot of our self-employed borrowers love to use our Doc. And another program we love is our DSCR, stands for debt service coverage ratio, no income or employment needed. We simply use the estimated rents from a rental property, investment property, a DSCR ratio. If the estimated rents can cover the expenses, the PITIA of the mortgage, that is a ratio over 1, which is what we use for these examples. And this first one has a 3-year prepayment penalty, which is standard for these programs. Rates for that option come in today, 5.999, final APR 6.307. Pretty conventional when we add that little 3-year prepayment penalty. And we can sweeten the deal even more. We can add a 5-year prepayment penalty to some options, and rates for those options come in today, 0.875, final APR 6.169, which beats conventional by quite a bit, which is pretty amazing. And there's always an option for no prepayment penalty for our states that do not, or investors that choose not to have it. Rates today coming in with no prepayment penalty, same as conventional, 6% rate. Final APR 6.321, so just a touch more expensive on the cost there. And we have many other options, but we won't get into those. If you need a full breakdown, please go to our website or ask loan officers. But today I want to go into our topic for today, which is going to be our one-time close loan. So let's pull up an example here real quick. I had our AI create a visualization for you. So you can see here, this is objective. It's a little bit hard to see when I pull up the listing here. You'll see why I use this graphic. But what our objective here with a one-time close loan is to buy an empty lot of land and build something that looks like this, a brand new, beautiful home. So this is a sample rendering of what we might be able to do in this scenario. So if we want to build that home, first we need to identify a lot. So that's what I was doing on Zillow, went into just my general area, found the first lot that pulled up. So this is an empty lot in an otherwise residential neighborhood. Obviously should have entitlements and everything we need to start our build. And we simply need to, the scenario where we're going to purchase this exact lot is what I put in all my different examples here. And we're going to purchase it for, I use 400,000, but you can see there it's 398. But for simplicity's sake, I set it to 400,000. And to make that beautiful home, I just put in the rendering. We're going to assume a $400,000 budget. Hopefully that's enough. Obviously, we need to talk to our contractor, our engineer, our architect, get the plans ready. But we're going to assume our borrower has plans for a $400,000 in order to build what we had just presented. And if we have that all together and some basic info for our borrower, just the basic profile we went in the demo scenario, we can get an actual quote here. So our first option is going to be our Fannie Mae, our conventional one-time close for a primary home. This option has an 11-month build time, so you must complete the build within 11 months. So that's why our borrowers need to be ready. Our developers, our contractors need to be ready and approved. And this option has a maximum LTV of 95, so 5% down is the option we chose here. You see here, I broke down some of the info on the scenario, and most importantly, the lot we're going to assume we're purchasing for 400,000. We're going to use a $400,000 build budget, and that's going to be a total cost of 800,000. So we need to make sure when we have our appraisal that the estimated final build when it's completed is going to be 800,000. Oh, I have a typo there. So the contractor and plans must be approved. There's going to be inspections at multiple draw periods. Pretty much the standard scenario, but your loan officer can help you out with that. But let's go ahead and check out the rate options here. So a couple different options for a primary home. This is pretty amazing to be able to purchase a empty lot, build your own dream home. And rates today are not much different from your standard rates, 6.749, the lowest rate option we can at this time, 2.25 discount points and cost. And the lowest cost option, 7.375 rate, coming in at 0.875 discount points and cost, which is pretty amazing. And again, this option assumes an $800,000 final purchase price, aka final budget. That requires a $40,000 down payment from a borrower. Loan amount is going to be $760. And just some basic breakdown on the scenario. You see we used a FICO score of 740 there. Now, unique option about this is technically Fannie Mae and the conventional options do allow for a one-time close for a second and an property as well. So I was able to get scenarios for those. So first up, we're going to assume this borrower is building a home in Fort Lauderdale for a second home. So the same example, the only thing that changes here, it's the same program, is going to be 10% down required for a second home. And everything else is the same. There is one note here. The cost is very high, 3.25. We would need a little bit of seller credits in order to make sure this works, which is typically available. That is the challenge with the second home. When we try to max it out to the maximum of 90% loan to value, 10% down, the challenge is going to be passing the compliance here. So we definitely typically will need some credits built in so that we can make sure we pass compliance or go to a lower LTV. And for this example, though, we were able to put 10% down for a second home for the same exact scenario. Now, the final option, technically, our Fannie Mae conventional option to allow 15% down for an investment property, which is pretty amazing. And these are even more challenging to meet the compliance as well, because it is higher costs, obviously, as we go up in the risks there from primary to second to investment property. So here, a little bit higher costs, nearly the same as a second home. Conventional options are typically, they're treating second homes as pretty much investment properties as far as the cost. So you see here the same rate, 7.749, with the cost of 3.5 discount points. So we need to make sure we get a little bit of credits here as well, which allows our same budget, 800,000 total budget, 15% down for our investors out there looking to use this option to purchase a new investment property. So those are all pretty amazing options. Again, if you'd like a full breakdown and an actual estimate on your exact scenario, please do one with one of our loan officers, drop a comment, or go to our website, we'll the loan officer in your area, and we'll break that all down for you. So thanks everybody for joining us today, and happy holidays and good luck out there. Hopefully finding a lot and purchasing